What's up, everyone? The last time Warren Buffett behaved like this, stockpiling cash, net selling positions, and making no major moves, the market was headed for a serious correction. Buffett isn't ringing any alarm bells publicly, but his actions are speaking volumes. Right now, he's sitting on a record $341 billion in cash. That's not a typo, that's billion with a B. Today, I'm breaking down what Buffett's massive cash positions means for the market, and more importantly, what you should be doing about it. If you're new here, I'm Eric, and on this channel, we talk about investing strategies that actually work, not by chasing hype, but by really studying what the greatest investors of all time are doing right now. Buffett has always said he doesn't have time for the market, but history tells a different story. When he stockpiles cash like this, something big usually follows. Let's dive into what's really happening and why 2025 might be the year smart investors need to pay attention. First, let's put this into perspective right now. Buffett is sitting on $341 billion in cash right now. That's 56% of Berkshire's portfolio and 1/3 of its entire market cap. Now, whenever we talk about Buffett's cash position, people immediately jump to, is he timing the market? Is a crash coming? But remember, Berkshire is primarily an insurance company, and Buffett's always said that they need substantial cash reserves to cover potential catastrophic insurance events. With that said, let's look at this chart showing his cash position from 1996 to 2024. Look what happened in 2008 to 2009 during the financial crisis. His cash position actually dropped by 40% year over year because he was deploying capital during the market meltdown. He put about $20 billion into beaten down businesses, including $10 billion into Goldman Sachs alone, which was essentially a vote of confidence in both the company and the US economy. He even wrote an op-ed titled, "Buy American, I Am." This wasn't just talk, he was putting billions behind his conviction. Now, let's look at what Buffett's been doing lately, because this is where things get really interesting. In 2020, he sold about $39 billion in stocks and bought about $30 billion. In 2021, he sold about $15.8 billion and bought $8.4 billion. In 2022, during the bear market, his purchases actually doubled his sales. But in 2024, he sold $143 billion worth of stocks against purchases of just $9 billion. That's a net selling position of $134 billion in a single year. This isn't about Buffett timing the market. This is Buffett looking at an overpriced, hype-filled market and saying, no thanks, I'll take cash only. And here's what most people miss. With treasury bills paying around 4%, Berkshire can earn about $13 billion annually just from parking that cash. That's more than their entire stock purchases last year. But here's what's really caught my attention. Buffett has even stopped buying back Berkshire's own stocks. After years of consistently repurchasing shares when they traded below what he considered intrinsic value, he spent just $2.6 billion in Q1 of 2024 and then zero for the rest of the year. Why, you may ask? Because he thinks his own stock became too expensive. This is what separates Buffett from typical CEOs. He doesn't view buybacks as a way to manipulate EPS. He sees repurchasing shares as an investment decision, no different than buying a Coca-Cola or American Express. If Berkshire shares are trading at a premium, even a small one, he'll sit on his hands. No emotional FOMO, no chasing performances, just pure logic and discipline. Buffett has a remarkable history of being vocal when markets are undervalued and quiet when they're overheated. In 1979, when inflation was brutal and everyone hated stocks, Buffett wrote, "You pay a very high price for a cheery consensus," and declared himself a huge bull on the American economy. So how were undervalued stocks back then? The market was about 58% undervalued. Today, we're approximately 100% overvalued based on the same metrics. In 1987, when the market dropped over 20% in a single day, Buffett was quietly buying while others panicked. In 1999, at the height of the dot-com bubble, he was vocal about stocks being overpriced and largely stood on the sidelines. When the bubbles burst, he went shopping. During the 2008 financial crisis, he wrote his famous "Buy American, I Am" op-ed and deployed billions. And during the COVID crash, buying again. The pattern is very clear. Buffett waits for the market to serve filet mignons at hamburger prices, and then he loads up like it's a $7 all-you-can-eat buffet. So what does this really mean for you right now? First, you gotta understand that you're in a different position than Buffett. His life doesn't change whether he's in or he's out of the market. But for most of us, saving for retirement, consistent investing is crucial. That said, there's a valuable lesson in Buffett's discipline. While others chase hype, value investors wait patiently for opportunities, and right now, Buffett clearly isn't seeing many. So if you want to navigate this market like Buffett with confidence and discipline, you need the right tools. That's why I created Market Dash, a all-in-one platform that's going to help you find value in any market conditions. All you have to do is click the link in the description to sign up for Market Dash today and get a 7 days completely free trial. This is the exact platform I use to analyze the market like Buffett, focusing on value, not hype. As Buffett himself would say, the money is made in the waiting. Make sure you're prepared when the right opportunities come along. As always, hit that like button if you found value in this video, subscribe for more content on building real wealth, and I'll see you in the next one.